I have a great pleasure in welcoming you all once again on Saturday's morning knowledge sharing session. Last time we had the procedure relating to the board meetings read with the SS1 and the relevant Companies Act and also touching upon the LODR regulations. Now, followed by that, we'll be discussing today about the committees constituted by the Companies Act under the Companies Act, mandatory committees, basically Audit Committee, Nomination Remuneration Committee, and the Stakeholders Relationship Committee. Although this is the company law related masterclass series, but nevertheless, in case of the listed companies, the regulations of LODR is required to be followed by the listed companies, and we will be touching upon those provisions, though not will be elaborately deliberating on these matters. And this topic is a very, very important topic because committee, as well as I can say, is nothing, less than the board, because it is nothing but a mini board. Because it is a smaller group of people who are expert in the field, they have been actually given a terms of reference so that they can concentrate and apply their mind and give their expert opinion, and then they can decide certain matters or can make the recommendation to the board. That is the way the committee actually works. So this is a very, very important topic because although the private companies may not require to have this sort of the committees, except CSR committee, which is actually there on the criteria which is being fulfilled. But nevertheless, in the private companies also, if they are registered under the NBSC regulation by the RBI, then again, the audit committee requirement is a must. So even in the private company, the audit committee under the regulations of RBI is actually constituted. Nevertheless, it will be governed by the Companies Act regulations. So anyway, this topic I won't deliberate much because we have two more stalwarts with us. They'll be actually touching upon their introduction on this. So with this, I will go on to introduction of our panelist, Savitri. Savitri,
Right,
personally,
Bala,
I...
before you
Yeah.
go for introduction, I've seen this today is the 25th webinar in the series of Masterclass on Companies Act. So almost it is over 4 months. We have started from section 2 and we have reached today section 177. So really happy to note that we could do it in 25 webinars on Companies Act. Many more to go, of course.
Definitely,
Thank you.
definitely, because the participation is excellent and it is really, really a knowledge sharing session. And we are also, I am also personally learning a lot of things from various people here when we meet. That is what. Coming to Savitri, my association with Savitri goes back beyond 1.5 decades. She used to be a regular speaker, faculty in Bombay Chamber of Commerce, CCGRT, and Western India Regional Council, and other forums, etc. I have seen her, and excellent, knowledgeable person. She is carrying over 3 decades of experience and in the multidisciplinary activities like starting from manufacturing to trading to private equity to media to pharmaceuticals, whatnot. She is a very excellent, exemplary person. I have never seen her coming with some sort of the writing pad, note, etc. and all this thing. Any topic you talk to her, she will talk extempore. She is a ocean of knowledge. And not only that, she has been actually teaching for the MBA student in the IIM Institute in Calcutta over a decade. And he has got many recognition nationally and also internationally. And she has been also a specialist editor for Ramaya's Guide. You may be knowing that any company secretary, when we walk into his office, he will have all the Ramaya's volumes, 4 and 5. Without Ramaya, nothing goes actually with the company secretary. So she has been actually an editor to the Ramaya's Guide to Companies Act of 2015 edition. And many of us may be knowing Bandari Guide for whenever we want to write the resolutions, etc. and other thing, we immediately refer what is the Bandari's Guide. And she has also been a general editor for Bandari's law procedure company law procedure for year 2015 and 2018. She has contributed a lot to this. And many of you might be definitely knowing she is being a versatile person. You might have heard. I need not elaborate more than this about her. But personally, I am very, very delighted to see her once again in our forum. Although I am staying in Pune, she is staying in Bombay. Personally, we have been not meeting. Last time also she said we'll personally meet. We'll have a lunch over it, which is due actually. I will definitely make a visit, Savitri. We'll catch up. We'll meet sometime. And coming to her international recognitions, she has actually dealt with the European laws actually, and she has been actually given a scholarship of young Indian lawyers from UK commissions, which was one of the recognition which is actually coming. In addition to that, she has also dealt with the competition of 1998 and the internal with the UK Richard LLB institutions, and such is the versatile person, Savitri. Now, without taking much of time, I request Savitri to share her thoughts about this today's topic and its importance, and then we'll request Sudhagar, as usual, our home person, and he will share his views, and then we'll start the presentation. Over to Savitri, please.
Thank you very much. And many thanks once again for the kind words. I have, of course, known you for a very long time. I've known you from the time I was green behind my ears. Experience, of course, is something which has come over a period of time. I still remember meeting you at the conferences where you were already an established player in this particular profession. So I humbly accept all the compliments given by you. Moving on to this topic, I would say that it's a wonderful topic to be discussed, understood. It forms the edifice of corporate governance. If you look at corporate governance as the bedrock which should dictate the manner in which an organization carries on its business, then it is very essential to understand the players who would be doing it. Of course, you have a divorce between the ownership and management in case of a company, which is the basic principle based on which Companies Act has been promulgated and has been made. But what is important is it's not the shareholders who are going to be interfering in the day-to-day management of the company, which is exactly the reason you have the broad powers which are fundamental, which the shareholders have. And the powers are basically vested in the board of directors of the company who hold a fiduciary position. But the board alone, by virtue of its meetings, will not be able to decide all the matters just at board meetings unless they are assisted in their performance of their duties by having proper, you could say, subcommittees of the board, which is the reason the statute itself has recognized few committees like audit committee, nomination and remuneration committee, or the stakeholders relationship committee. And wherever it is applicable, if the entity is a listed entity, they're also required to have risk management committee. And in case the company has an obligation to contribute to CSR, a CSR committee, if it exceeds the limits given in the act, that is about if the contribution exceeds 50 lakhs, only then they are required to have a CSR committee. Having said that, these committees play a pivotal role in guiding the board in discharge of its functions. And principal among them is the audit committee. Of course, in case of listed companies, the risk management committee is one which ranks fairly high and is just next to the audit committee, I would say, in terms of importance. Therefore, it is very important to understand as to when is it necessary to have these committees, what is the constitution of these committees, what are the terms of reference, how important it is, what is the area of overlap between provisions of Companies Act and listing regulations, what are the nuances, and why are those provisions to be understood in the right manner. For example, terms like financial statements and financial results. which have been used in both the places, becomes very important to understand. Of course, financial results is not used in Companies Act. The term is used only in listing regulation. But if you refer to Schedule 2, Part C, it does not refer to the term financial results, while it is there in Regulation 33. These are all very important small points which I'm sure we would be able to pair them as well as do a proper deep dive and analysis. I very much look forward to this session and the question answers, which I'm sure the participants are eagerly waiting to raise to all the panelists. And I must end by stating that I really look forward to these sessions because to me, this is a great learning experience. And in our learning journey as professionals, it is the repeated issues which keep coming up, the nuances of law which are raised are the ones which add to greater experience, which merely reading will not afford us and will not offer us. Thank you very much.
Over to Sudhakar, please.
Good morning, everyone, and good morning, Savitri. Delighted to share the virtual platform once again with you. Many of the participants knows that myself and Savitri, we used to share several conferences together. We were there as speakers, and when Savitri joined Reliance, thereafter we were not been invited together. In fact, sometimes people used to ask me why Savitri Madam has not come. And at one point of time, even I have been asked that whether we have some kind of a what's called as an okay difference of opinion or what we are not attending the conferences together. Then I was to clarify them why we are working in the same company now. Obviously, from the same company, people will not have different views. That might be the reason we have not been invited. But having said that, look forward once again because now we have started again physical conferences. We are not working for the same organization. We may be sharing a platform in physical mode also, Savitri.
Absolutely.
Coming back to the, as far as the topic is concerned, since we are going to talk only the provisions of the Companies Act, most of the audit committees where this private, of course, private companies, they don't need to constitute an audit committee statutorily, but closely held companies, they do need to, unless until, as Bala has mentioned, if any private company is into NBFC activities, as per the RBI regulations, they do have to constitute an audit committee. And wherever you are constituting the audit committee, obviously you have to also comply with the provisions of Section 177. When I used to interact with the most of the directors, especially of private companies and closely held public companies, though they have been appointed as directors, what I experienced is they lack the training. What for they have been appointed as a director, what are their duties, role, responsibilities, accountabilities, etc. If at all they have been trained as a director also, but there is no training as far as the committee memberships are concerned. It is always taken for granted that a person has been appointed and he will learn on his own everything. But the way the Companies Act 2013 is evolved, that it is highly recommendable even to the directors who are members of these committees. They need to have a proper training. At the same point of time, I also submit to all the participants of this particular conference, webinar is that wherever and whenever you work, please do give a direction to your directors as well as your committee members on their role, responsibilities, and accountabilities. Please don't say that they don't listen to me. They have to listen to you. It is up to you how you will make your submissions, representations, advisors, whatever it is there. Because unless until they understand the importance of the provisions, legal provisions, similarly the committee memberships, etc., they don't even understand the importance of the company secretary. So if you want to establish yourself as a company secretary, you need to take pains to explain to your directors about their importance and the significance of these committees also. As Savitri has mentioned that no doubt audit committee, even nomination, remuneration committee, these committees are bedrock for the corporate governance. in particular audit committee, as Bala has rightly said, this is almost equivalent to your board. So the audit committee members have to be sensitized that when they are playing the role of the audit committee member, they have to engage with the auditors. Most of the times, the committee members think that engaging with the auditors means only with the statutory auditors. Several times I asked when I was interacting with the directors, I say, how about secretarial auditor? They said, do we need to engage with the secretarial auditor? Do we need to engage with the cost auditor? Why not? As an audit committee member, they do need to engage not only with statutory auditors, but with secretarial auditor, cost auditor, of course, internal auditor. How they will come to know about the importance of the secretarial audit? That again, the same thing as a company secretary, you need to sensitize your audit committee members about the role of the secretarial auditor, about the importance of the significance of the compliances. So constitution of these committees, just having holding the meetings and then okay, drafting or writing the minutes is not the end of it. That is only the beginning. So it should not be taken as a formality. And as I was mentioning that, please, wherever it is required, do ensure that a kind of a formal training is given to all these members of the committees. Unless until whatever I said, it happens, the importance of the company secretary is not going to be there. So I give a pause here, and during the Modul's presentation, we will discuss the importance of these committees further. Thank you.
Thank you, Sudhakar, for your word of wisdom. One thing is there, you said it very clearly. The company secretary's voice is to be heard by the management and the board. That is the one thing. Very clearly, you said it, number one. Number two, I recall actually whether the audit committee need to interact with the other auditors. In fact, way back in 2000, where I was working in a listed company organization, we used to organize a separate audit committee meeting other than considering the financial results, full day, morning to evening. We used to invite all the outside people, including statutory auditor, cost auditor, and even the people with whom we are dealing with, like, expert consultant in the field of income tax act. Those days, wealth tax was also there. Those people, all those people, even central excise, all those people we used to invite. And we used to tell the audit committee members, you directly hear from the people what is their view. Although we are giving the statutory report and giving the updates, etc., it is better to interact with them directly. That we used to have. That is number one. Number two, when you talk about the audit committee's importance, many a time in our organization where I was working, audit committee meeting used to be longer than the board meetings. It is so many a time in many companies also. That is the thing. Okay, with this, I'll ask Mridul to start the presentation. Request to the participants, please put up your questions and queries on the chat box. As usual, we'll be taking up periodically then and there when the things are there during the course. And if there is anything you would like to speak, you would to raise anything, at the end of the presentation is over, you can raise your hands and we will definitely permit you to speak and we will answer the questions. Thank you very much. Over to Mridul, please.
Thank you, Professor Bala, and thank you so much, esteemed panelists. I am much overwhelmed today. Not only Sudhakar sir, I have another stalwart, Savitri ma'am, to enlighten the participants on this very critical topic. Before delving further on the slides, just one remark I would like to make that my own learning and feeling is that what is the ultimate goal of all these committees? The ultimate goal is to make recommendations to the board. That's how I look at it. Now, to arrive at those recommendations, uh, it's very important who all are composing that particular committee, what kind of discussions, what kind of research, what kind of decision making. That's very important. And in the slides further, we will see that how the provisions of the Companies Act have shed light on these particular aspects. So with this backdrop, let's begin with the presentation. So, what do we understand by a board committee? A working group of experts created by the board of directors to serve several functions. And as Savitri ma'am very rightly said, the whole edifice of corporate governance is set by these board committees. So, to better governance, to help in effective decision making in specific area of operations with which that committee deals, and to research and make recommendations to the board. Today, we are looking at the three mandatory committees to be constituted under the Companies Act: the Audit Committee, Nomination and Remuneration Committee, and the Stakeholders Relationship Committee. What are the statutory provisions? We all understand Section 177 and 178 of the Companies Act 2013, read with the company's meetings of the board and its past rules. And of course, the secretarial standard SS1 on board meetings, adherence to which is mandatory as per the Companies Act, also applies to committees of the board. We begin with our discussion on Audit Committee. Audit Committee undoubtedly is, we all would agree, is the main pillar of the corporate governance mechanism in any company. The shared responsibilities enshrined on an audit committee, it aims to enhance the confidence in the integrity of a company's financial reporting, its internal control processes, and the risk management systems. Under the Companies Act 2013, we have seen how the scope and constitution of an audit committee has been broadened, and the provisions are still evolving. The terms of reference have an ever expanding scope. Let's first understand the applicability, like which companies are supposed to constitute an audit committee, and this is explained under Section 177. The board of every listed public company and the following classes of companies. So the thresholds have been defined. This is your paid up capital of 10 crores or turnover of exceeding 100 crores, or if you have your outstanding loans, borrowings, deposits in aggregate exceeding 50 crores, then you are supposed to constitute the audit committee. Now, when will you assess whether your in aggregate your outstanding loans, borrowings, debentures exceed this limit is on the date of your last audited financial statements. Here, we need to discuss that, okay, it's every listed public company and the classes of companies. However, you might be a category of companies, say an IFSC public company, right? So that is exempt from the provisions of Section 177. And this is how you then decide after your company, this audit committee is in place, that what would be the composition of the audit committee. So the Act says minimum 3 directors and independent directors forming a majority. Next, that the majority of members of the audit committee, including the chairperson, shall be persons with ability to read and understand the financial statements. So,
Sir, would you like to say something on this? Or able to read and ability? That means it simply means they need not be a chartered accountant qualified or a BA qualified, etc. and other things and that. But I would like to have your views, please.
See, that, ability to read and understand the financial statements. Several times we say this thing that the company secretaries also have to develop the ability to understand and read the financial statements. What does it mean by merely reading it is not sufficient. At the same point of time, even the directors, if you go as per the words, don't go as per the meaning, read and understand, ability to read and understand. What I'm trying to say here is, unless until the audit committee member has a proper understanding of that, that means what? Say, for example, the accounts are to be maintained on accrual basis, not on cash basis, where the provisions are to be made, what are the legal requirements are there, all these things they are supposed to understand that. But at the same point of time, do they need to have professional qualification? Answer is no. Whether the person needs to be a chartered accountant or a cost accountant or a company secretary or MBA finance, those kind of professional degrees are not required. But the only thing is he should be having some kind of an expertise if he is an audit committee member, because the kind of role what he has to play to engage with the auditors based on their report, what they have given, he need to have definitely a kind of a good understanding of the financial statements as well as financial results. He should be able to question the auditors. He should be able to question the management about the presentation of accounts. Otherwise, the management can always take the audit committee member for a ride, presenting whatever they want to do it. And tomorrow, if God forbids, if anything goes wrong with the financials, it is the audit committee members as directors will be held responsible as well as accountable. Yeah. Savitri, you may also like to say something about this.
Sure. So actually, as Sudhakar rightly said, it's not necessary to have a specific qualification. It's not necessary to be a cost accountant or a chartered accountant or anyone who's professionally qualified to be, or an MBA to be able to read the financial statements, but should have an understanding of being able to read the financial statements, of being the person should be financially literate. For example, if there are disclosures to be made, the person should be able to see as to whether the disclosure is complete. Is it one which is lending credibility to the financial statement? Is the disclosure correctly made? Is it one which is sufficient? Because without it being sufficient disclosure, a reader would not be able to understand. Because if it is only English without actually explaining what the issue is, then the reader is not going to get a correct picture of the financial statement. And the responsibility is of the directors. Now, once again, the directors, when they are recommending to the board the director's responsibility statement, Section 134(5) may appear to be just a simple statement, but that's the main provision on which liability of the directors would be tested under Section 149(12). So when they are coming to that conclusion, on what basis are they doing it? Has the estimation which has been used in preparation of the financial statement been done by exercising proper judgment? So which are the areas where estimation has been done? Which are the areas where it's just based on facts? Have the policies, accounting policies, been consistently followed? And for all this, it is necessary to have knowledge of the financial statements and a proper understanding of it. So that is the reason the person should be financially literate, not necessarily qualification wise. Yeah. Over to
There are two comments have come from the audience. Unfortunately, PSU directors are appointed by the relevant ministries, and all are sundry public figure from the field of the art, culture, films, and politics have been appointed as the directors, and a few of them land up in the audit committee. And second comment which has also come, would you say that the best person to chair the audit committee would be a practicing or retired auditor?
So, I personally believe that a coach need not be a good player. Sometimes players who are not really very good at their game have made excellent coaches. And I would say the same even with respect to the chair of audit committee. What is important is the person should be able to ensure good participation of the others, should also be able to raise those points which deserve uh, a detailed discussion. It is not necessary that the chairman is the best among all the persons in terms of financial statements being understood and read. For example, if you have a person as one of the persons of the audit committee, a member of the audit committee, let us say, is a chartered accountant, and the chairperson is, let's say, a retired senior person from the industry who understands the business. He would still be able to look at the specific areas which need spotlighting, and the auditor who's a member of the team, ex auditor who's a member of the team. When I mean auditor, I'm not referring to auditor of the company, but a person who's a professional as an auditor, he would be able to bring in those specific points with respect to the accounting standard or the practices, and therefore the discussions would be automatically enriched. So I would not say that it is necessary. However, among the members, if the person who has been a practicing auditor or a retired auditor who's there as a member of the team and is fairly senior with relevant experience in the industry also, it would be good to have him as a member of the audit committee. But either ways, it's okay. Again, it depends on the mix of the audit committee. Talking of PSU directors, yes, of course, the recommendation comes from the ministries. However, just because people are from art, culture, films, or politics does not necessarily mean that the person does not have financial literacy. And in any case, all of them wear the same crown of thorns when it comes to liabilities. So even if a person does not directly know, he or she should get himself or herself adequately trained to be able to understand. And training of the directors is also important. And if they have trained themselves, then there's absolutely no bar. I mean, I've come across few members, at conferences who've been members of audit committee while they come from completely a unrelated field. I mean, I had once an occasion to interact with people who were dancers from the creative field, and there was a discussion on Copyright Act where there was an amendment that was proposed about 20 years ago. But I was really impressed with their understanding of business because each one of them was an entrepreneur in one's own sense. So it's not about the profession that you come from, but it's about the training and the skill sets that you've acquired over the years, which is very, very important. If you have not acquired, yes, it will be difficult, and it is imperative that one acquires. And of course, these are not things which cannot be acquired. I've seen few doctors who speak language of the auditors. So it's a question of how you acquire the skill, and if you have done it, you're a good fit. If you have not, it's going to be tough.
Yes, Vardhan, go ahead.
Sir, one more question we can take up before we go further, because this is otherwise we'll move specifically to the provisions of audit committee. This person, he says Rajesh Kumar, that committee formed under section 179 for delegation of powers, whether such committee is a statutory committee. No, so Rajesh, see, I remember if you look at section 179, the word used is may. The board of directors may delegate the powers which are supposed to be exercised by them under section 179 to a committee or to an official of the company. So it's not a statutory committee. And Savitri ma'am, further, can you please clarify, because then we further ask that whether disclosure of meeting of such committees needs to be mentioned in Form MGT 7, it
No.
not being a statutory.
No, since it's not a statutory committee, this is not required. Actually, 179, when you form committees under 179, it is by virtue of authority conferred on the board to delegate the powers, which is more from an administrative perspective that the delegation of powers is done. And those committees are not statutory committees, and no disclosure is required in the annual return. Let me take this a little further. For example, for opening of bank accounts, in case of large companies, they would actually delegate this power of opening of bank accounts to a committee comprising of senior executives of the company, in which case every time a resolution is required, it is this particular committee which would be passing these resolutions. And I'm just oversimplifying just to show that you would not be referring to the banking committee, which is a non-statutory committee, in your annual return. Similarly, any other committee which has been formed, which is non-statutory, you would not be referring to it.
In fact, I can give one more example also. In Reliance itself, we have one health, safety, and environment committee. Considering it is an refined refinery, such a major this thing is there. So health, safety, environment is very, very important. So a committee of the board itself is constituted. It is a board managed committee, but still it is not a statutory committee. We have a finance committee, again comprised of the board of directors only, not even executives, but it is not a statutory committee. These are all management committees, we call it as. Yeah.
Sure. So we proceed further. There is a question on invitees. We'll take it up when we come to that
Yeah, we will
topic.
take it that later. You
Yes,
can continue with
yes.
the.
So we now come to the functions of the audit committee. What are the functions or the role played by the members of the audit committee? So here, subsection 4, the terms of reference have to be specified in writing by the board. So this is very important. The terms, unless they are specified in writing, then that does not come within the role of the audit committee members. And the terms of reference guidance has been given. It's an inclusive guidance. So if you look at practically some of the good companies, how they have framed their terms of reference, you will see much exhaustive kind of functions being referred to the audit committee members. And some of the important ones as a guidance are the recommendation for appointment, remuneration, and terms of appointment of auditors of the company, then effectiveness of the audit process, reviewing the auditor's independence and performance, examining the financial statements, just and scrutiny of intercorporate loans and investments, then valuation aspect, evaluation of any assets or undertaking, your internal financial controls and risk management systems, and monitoring the end use of funds raised through public offers. Then any related party transactions. So when we talk of governance, at the helm of governance is the approval with respect to the related party transactions. Every company, day in, day out, and as company secretaries, you all would be looking at your own RPT charts within your organization. And before the matter is taken up to the board, it's the audit committee which delves deeper into the transaction involved. So here, the Act provides further guidance on how the approvals by the audit committee can be made. The concept of omnibus approval was introduced, and which has been very helpful, is once and for all considering certain factors, the repetitive kind of transactions. Those can be an omnibus approval can be provided by the audit committee, and so that time and again the same transaction is not put up before their consideration. So two aspects: the repetitiveness of the transaction, whether in present or even in the past, has to be looked upon, and the justification for the need of such omnibus approval. Then the details of the transaction that are presented before the audit committee are very important, like the amount, the value, the connection with any director, existing official of the company. And where no such detail is available, even then a threshold of 1 crore rupees has been provided, up to which omnibus approval can be provided. This approval is valid for a period of 1 financial year, and after the expiry of that year, fresh approval is required. Then there is also a provision that in case a transaction, other than Section 188, we all understand the list of related party transactions under Section 188, aside that, any transaction which is not approved by the audit committee, however, still audit committee can make its recommendations for consideration of the board. Then there is a provision of ratification within 3 months by the audit committee. So again, the threshold is transaction up to 1 crore. And if not ratified, the transaction shall be voidable at the option of audit committee. And if such transaction happens to be with a related party to any director, then the director shall indemnify the company for any loss which is incurred to it. There is an exemption here to be noted, that the above provisions we just discussed, they do not apply to transactions between holding company and its wholly owned subsidiary. However, again, the transaction should not be one falling under Section 188. So, any Savitri ma'am, Sudhakar sir, this is a very
Yeah.
critical
See,
segment.
Savitri, there is one issue I want to just check with you is that
Yeah,
if you see the second proviso to subsection 4 of section 177, it says that in case the audit committee doesn't approve the related party transaction, other than the transactions referred to in section 188, they shall make their recommendation to the board. So when the audit committee is not approving the transaction means they are, rejecting the transaction.
right.
When they're rejecting the transaction, then what kind of a recommendation they have to make it to the board? Several times this question comes up.
Sure.
And also, some people are interpreting this in a very narrow manner that once audit committee reject these transactions, the board cannot approve that such transactions. What is your view on this?
Okay, let me address the second question first. Uh, can the board approve a transaction which has not been approved by the audit committee, or rather, which has been disapproved by the audit committee? Answer is yes, the board has the power, and also in the director's report, you are required to mention as to whether there was any recommendation of the audit committee which was not accepted by the board, and this is exactly the one which would fit in. And if at all there is a decision of this nature, the company will also be called upon to give a rationale as to why they did so. For that matter, even in the minutes in both audit committee as well as the board, it will be very essential to write the rationale, because this will come up in question sometime or the other later. Now, coming to the first question as to what exactly would this second proviso to section 177(4) actually mean? Basically, uh, this particular provision is in sync with the authority matrix. The authority of the audit committee emanates from the board, and if the audit committee has certain reservations and therefore does not approve, then it need not stop right over there. With respect to related party transactions, if the audit committee has a differing view, then it can state that it is not approving. The word used is recommendation. Typically, one understands the word recommendation as something with a positive connotation. Here, what they are saying is we refuse to give a positive recommendation on this particular proposal for the following reasons, and the matter goes to the board for a decision on that particular matter. The board, actually this particular provision has also been brought in because under rule 15 the board has the authority to approve transactions which fall under section 188. So if the transaction does not fall under 188 and the audit committee has rejected, then it basically means that there is no way that the transaction can go through. So which is the reason it goes to the board. The board may approve, may disapprove. If the board approves, then it can go through. Now, let us see as to whether the board would be inclined to approve, because the audit committee has majority of independent directors, and of course, if it is one with SRs, then all the members of the audit committee would necessarily be independent directors only. So, will the board approve a transaction which has been rejected by the audit committee? I would say, based on the facts, it is possible. Let's say, for example, the related party transaction is very important from an operational perspective. The transaction with that particular party over the years has been good, and therefore, on arm's length, let us say hypothetically, the audit committee has not been convinced and therefore says that this does not appear to be an arm's length and therefore we are rejecting. Even if it is not an arm's length, the board has the authority to approve if it does not exceed certain limits. Of course, the board, in this case, which does not fall under 188, can also come in and take a call and approve it. But what is important is the board should have reasons to consider this particular matter and approve. One ticklish question which may come up is, Sudhakar, what about directors who are members of audit committee who had earlier disapproved? Can they vote in favor when it comes up before the board? Which
That
is
is exactly I
exactly
wanted to ask you actually. Can they change their stand? One stand in the audit
absolutely.
committee, one stand in the board.
Absolutely. Now, there is no bar on a person changing his view if the perspective which is placed before him or her is different from the one which was placed before the audit committee, which essentially means there are some additional facts which change the situation, or there are some additional matters which are brought to light. It may not be fact, but it may be with respect to something which is going to help in exercise of judgment. But what is important is it's only minutes which will speak over a period of time, and hence it's very important to document in a proper manner. For typically it would be additional facts, ensure they are properly brought out. Now, let me also go to the last additional point from my end. If the audit committee is not positively inclined, what should a company secretary do? Should he allow the audit committee to reject, or very diplomatically say that why don't we defer the discussion on this matter to the next meeting and see if there are additional facts, so that he or she is able to bring in the additional facts placed before the committee to see whether they are still going to be approving. If they are still not going to be approving it, you may consider whether the matter should be rejected outright, removed from the agenda, or should you really go through the process of going to the board? Because from a governance perspective, any such decision will be under scrutiny. There's nothing wrong from a legal perspective. However, from a practice perspective, this is going to be another point, because the moment you disclose in your annual report, if you are a listed company, the proxy advisories will ask you a question. If you are a listed company with debt securities, the rating agencies will be having one meeting with the audit committee, and this will definitely be a question which will be posed before the audit committee. And although the voting results are not known to the rating agencies, the question will come up, because that's a free flowing discussion. They'll say, when the audit committee had earlier rejected, the board also has 50% of independent directors, with all directors attending the meeting. How did this resolution go through? Where the independent directors split on this matter? So these are questions which will definitely be asked. I'm not for a moment saying that one needs to be afraid of the questions, but you need to be prepared with your answers. Over to you, Sudhakar.
As you rightly said, Savitri, in fact, sometimes it may so happen the audit committee might not be having that kind of a bandwidth
Yeah.
to understand the issue, and they may not be able to approve it, but at the same point of time, as you rightly said, they are not rejecting it also altogether.
Yeah.
So that point of time, it is rightly so also it is up to the audit committee chairman to recommend the matter to the board. Recommendation does not mean that they have to say we have examined this issue. These are all the checkpoints what we have examined. We are not able to decide either way. Now it requires a discussion on a wider forum. So hence we are recommending it the board to take up this particular issue.
True.
So it so happened, as you rightly said, this is always this question also comes up. Rightly, you have addressed it. Whether the audit committee member who were not able to decide that the 4 members or 5 members, whatever it is, how come when they sit on the board, they are approving it? Sometimes 1 or 2 members may be expressing their dissent also while giving the recommendation, but at the board meeting, he might be approving that. The reason being, 2 reasons. Number one, you are discussing and deliberating the issue at a wider forum. You are getting more facts and figures on the table. You are getting more matured during the discussions. And at that point of time, ultimately, you are going ahead with that. Sometimes it may so happen the CEO or CFO who are not there in the audit committee, considering this issue, they might be joining the board and explaining it with more facts and figures. And I mean, look, that is the one. Number two is that another question is coming up in this transaction of value up to 1 crore entered into by any director or officer without AC approval. it is to be subsequently ratified by the audit committee. Otherwise, they will be held responsible. Now, the question comes, Savitri, is that they said transaction of value of 1 crore. That means the directors can incur, can enter into transactions of 1 crore, 1 crore, 1 crore, or less 1 rupee, less than 1 crore at all, and then go on entering that without taking omnibus approval and subsequently putting it to the audit committee for ratification. Governance point of view and even strictly interpretation point of view, I am not like this kind of a things, by up to 1 crore, go on incurring the transactions and getting it ratified. But anyway, before we discussing it further, what is your view on this ratification process?
So, it's very interesting, Sudhakar, that Section 177 of the Companies Act does not refer to prior approval. However, if it's a listed company, Regulation 23(2) is very clear that it has to be prior approval. So let's assume it is not a listed company. Can you have a post facto approval? Answer is yes. Now, if you refer to this particular provision, which says that a transaction up to 1 crore is entered into by a director or officer without audit committee approval, which basically means it is subject to voidability, right? To avoid this particular transaction in case the audit committee so desires, but it is a post facto approval. From a governance perspective, anything which is post facto is not a good practice because you are presuming that it will be approved. Let's say, for example, you have ordered a machinery which, for hypothetical examination case, let us say is less than 1 crore. While the audit committee has the right to avoid this particular transaction, it is not going to be a commercially comfortable transaction. So, therefore, it is better to take prior approval. Now, specifically addressing this issue of 99 lakhs into several transactions, for hypothetical analysis sake, let us say 99 lakhs into 365 transactions, it's definitely an abuse of this provision. While the term transaction has not been defined over here, it will mean a transaction or series of transactions forming one transaction or a transaction of purchase. Now, if you refer to it as transaction of purchase, whether you're buying raw material or you're buying a fixed asset, will all fall under the transaction of purchase. Now, one may say, can I have transaction of purchase up to 99 lakhs and transaction of sale up to 99 lakhs in the whole year? I would say it's not a good practice. Please don't do it. This has been provided only to provide a bit of a leeway in functioning. Let's say, for example, you are going to get some banners printed for an event which is going to happen in 2 days, and you don't have any other opportunity to go to a third party because the person who you know is a related party and he's going to do it at a much cheaper price, happens to be a director who's engaged in that business. You don't have to wait for approval. You can go ahead, is what this provision says. It's in the interest of business to promote business, but it should not be used in a manner which will abuse the very provision which is there. It's not a loophole, it is an intentional provision to promote ease of doing business.
At the same point of time, in fact, though it is not said prior approval, at the same point of time, it has also not said post facto approval also. If you read the section together with the rules about the omnibus approval and all, the mechanism why it has been given is wherever the repetitive transactions are there, you don't need to go to the audit committee time and again. That is the reason that facility has been provided. You take an omnibus approval. So by exception, if anything is there, suppose during the course of between two audit committee meetings, you have taken the approval, but business exigency is there, you have to incur into a transaction on exceptional basis that can be done. But it has come to my knowledge, some people are wrongly interpreting this approval. In 188, it is prior approval. 177, it is not prior approval. So post facto approval will do. So when you are the secretarial auditor, please examine this very carefully. As Savitri has rightly mentioned, if anyone is trying to abuse the provisions of the sections, ROC may take a strict view of this thing And he may rope in even the secretarial auditor also if he is not qualifying his report as far as these kind of issues are concerned. That is the only reason actually I tried to raise this issue, because in one or two companies which has come to my knowledge, the company secretary says that when the omnibus approval, no one is giving him the information. Subsequently, left, right, center, they are doing this thing. And with the CFO says that we can always get it ratified. Why you are worrying it? The company secretary rightly getting worried because tomorrow if ROC, God forbids, for an inspection or anything, and if you see every time the audit committee is only going on for ratification, even according to me, audit committee members are also not discharging their responsibilities properly, because ratification should be by exception. It should not be by default. Yeah.
So
Well said.
there is
Well,
one question which has been raised, asking as to whether post facto approval and ratification, whether it would mean the same. Yes, it would mean the same. Post facto approval means after the fact has happened, you are taking approval. Similar in case of ratification. So, say for example, you have, let's take three situations. One, where you have entered into the agreement but you have not purchased the goods. The act of entering into the agreement may be within the general power granted to the general manager of the company, but it is a related party transaction. Will you say it's post facto? Answer is yes, it still is post facto because the person did not have the authority to enter into this particular agreement, because as per the policy you would have said that it needs to be approved by the audit committee. Let's take a second situation where the agreement has been entered into and it says the agreement is subject to approval of the audit committee. Will it be called a post facto approval? Answer is no. It only says if the audit committee approves, this agreement goes through. And I would actually compare this with section 294 of the Companies Act 1956, which said that you can appoint a sole selling agent, but the appointment would be subject to approval by the shareholders at the following annual general meeting. So, what happens is you have taken the decision to do something, but it is subject to approval. And if the approval does not come through, it automatically fails. Now, in case of sole selling, the person could have acted as a sole selling agent. Here, the example that I just gave, the agreement is entered into, it is not given effect to because it says it is subject to. Let's take the third situation where you've entered into the agreement, you have said it will be subject to, but you've actually gone ahead with the transaction. Again, it will be one which you are ratifying because some act has been done apart from just the agreement, and you have given effect to the agreement by doing that. Hence, it is called a ratification. Ordinarily, post facto approval and ratification would mean the same, except in a small situation where you have entered into an agreement but not started the transaction. And you made the agreement subject to approval, saying we will give effect to this agreement and start the transaction only after receipt of approval of the audit committee, in which case it will not be called a post facto approval. But post facto ordinarily means after the fact has happened, and hence it will mean it is the same as ratification. Yeah, over to you.
how can the
And
audit committee,
a quick,
how can the audit committee ensure, uh, how can the audit committee ensure the related party transactions are at arm's length? Should they get outside experts to certify the same?
So, arm's length basis is the term used in Companies Act. It does not say arm's length price, which means it is not just price but also the terms and conditions of the sale. Let me give a simple example. Let's assume the related party is selling goods at 90 rupees, while in the market goods are available at 100 rupees. So, in terms of price, it is definitely much lower. However, in terms of credit terms, let's assume the outside parties are giving you 3 months credit while the related party is asking for 7 days advance payment, which means before you proceed with the transaction, 7 days before that, you have to place the order, pay the money. Only post that will you get delivery, in which case you will actually be seeing the price comparison, and if the price is not comparable, if the price with advance payment is much higher than the third party price, you will say it's not an arm's length basis. Having said that, this particular approval of related party transactions is one which actually requires a detailed transaction by transaction checking. For example, when you refer to arm's length basis, let's assume there are 20 containers which are imported by the company on a monthly basis. Will you see whether the container 1 is on arm's length basis vis-a-vis container 20? If the price of container 1 vis-a-vis 20 is higher, how are you going to be determining? Will you go by the weekly price which is announced by the authorities, or maybe the association, an international price? Based on that, will you do it? How exactly will you be doing all this will become a question. So you need to have a policy which, maybe with respect to goods which are imported at a very, very frequent interval, you may possibly take the weekly average, or you may take the weekly price, because in one consignment you may have got a 1 rupee benefit, on another you may have got a for 20 rupee benefit also. And therefore, all this put together you will be considering as one block, and you would then be seeing as to whether the price is on arm's length basis or not. Coming to the next point in the same question, should you get outside experts? In terms of outside experts, the outside experts will check the facts and give a proper report to the committee. The committee would then be actually asking them as to whether certain parameters are satisfied or not, based on which the committee will be taking a call. So, with respect to related party transactions, if there are many, it's always advisable to get a third party expert view on this, because with respect to related party transactions, it is a transaction to transaction checking which is done, which the audit committee may not have the wherewithal to be able to do it and spend so much of time, not in terms of skill but in terms of time. Hence, it may be advisable. However, the audit committee cannot say that the third party said it's on arm's length basis and I have accepted. That is not permitted. The audit committee will have to exercise its own judgment, see whether the parameters have been correctly followed, and based on that, they are the ones who are approving the related party transactions. They cannot say that our judgment was only based on the report. They have to say that they have looked at the report, they have considered the facts based on which they are arriving at a judgment. They are only saying that that's supplementing their analysis, but they cannot completely say that as given by the so and so related party chartered accountant, we are approving the transaction. That is not okay. NAFRA will definitely take a very strong objection if such a thing is done. Yeah.
Yeah, just to add to that, I would like to say is, as audit committee members, they cannot just depend upon the certificates and reports given by third parties or experts, whatever it may be. At the end of the day, it is you as an audit committee member will be held responsible for the decisions taken thereat. I always say that as a director, as an audit committee member, people several times question me that in the training programs and all, that how you are expecting us to know each and everything. Suppose if you go to a, whether it is a district court or a high court or a Supreme Court judges, they might not be knowing every law. They are getting educated by the contestants, both the advocates who are contesting, they're explaining to the judges, they're drawing their attention to the legal matters. The judges are putting questions, and based on that, they are giving their judgment. Same as here as an audit committee member, he has to spend time, he has to try to understand the transaction. And then he has to put the questions that based on what that this arm's length price has been arrived at. As Savitri has rightly said, that it is not arm's length price, it is but arm's length only. So price is not the only criteria. Sometimes it may so happen, even if you spend more also, it doesn't matter. Still, you can justify that it is at arm's length. The reason being, you have to see the image of the supplier, its track record, its quality, the timely deliveries. There are so many other factors out there for which you may have to pay a bit more price. That is very much required. Yeah.
Sudhakar, one more thing is there. You brought a very final points regarding the secretarial auditor in relation to related party transactions. It is very true. Many times what happens is secretarial auditor, they think that statutory auditor has not committed anything. They already okayed it. I have gone by that. That is what sometimes it happens. But there have been decided cases where this point has been raised by the register of companies while making the adjudication process. And in fact, they have gone to such an extent, referring the secretarial standard as well as the guidance note issued by our institute. They have actually verbatim produced what are the things the secretarial auditor need to exercise in check and balances, what are the checklists, all those things they have referred, and ultimately in that particular case, I think the secretarial auditor was penalized to the tune of about 2 lakh rupees for not disclosing the related party transactions, related matters in the secretarial audit report. So my request to all the practicing professional, kindly go through the requirement of the SS1 and also read the guidance notes exactly. Let us not depend upon statutory auditor has done and they are not commented. I have nothing to do with that. That sort of the things is not going to help out when the matter actually comes out. The guidance note is very excellent. Even Sudhakar and other SSB members, they have been spending enough time boiling their midnight, and then they are bringing an excellent note with the good examples and illustration and other thing and all. That should be helpful. I think we should make use of it. Yeah.
But while it so happened, coincidentally, Savitri was the convener for the first RPT guidance note, and I was the convener for the revised guidance note on the RPT. And
Great,
at the
sir.
same point of time, as you rightly said, if there is a difference of opinion between the statutory auditor and the secretarial auditor, it is the responsibility of the company secretary who is in service of that company or the director of that company to bring these two people together. They have to get convinced each other, and they cannot give diversified reports unless until it is imperative. To a large extent, either the statutory auditor has to explain to the secretarial auditor and vice versa. So they have to come to a consensus and they have to give a unique report. Wherever they need, they have to get more information, more backup papers, but to a large extent, unless until it is imperative, they should not give a diversified opinion. Because both of them will be in soup, and the company itself also will be in a soup in that situation. Yes, brother.
Yes, Birdul, go ahead.
Yes. So to exercise all these functions, to discharge all these functions, certain powers have been given to the audit committee. And the powers are to call for the comments of the auditors about the internal control systems, the scope of audit, their observations, and also the review of financial statements before the submission to the board. And further, the audit committee members are also empowered to discuss any related issues with the statutory auditors, internal auditors, and the management of the company. So, such is the power that the members have. And then further to also investigate into any matter in relation to the items which have been specified in the terms of reference or which have been referred to the audit committee by the board. And for this purpose, the audit committee has the power to obtain professional advice from external sources. This answers many of the queries participants had asked. And for this purpose, the audit committee also have full access to information contained in the records of the company. Then whenever the audit committee meetings are held, the auditors and the KMPs, they have a right to be heard because they might be invitees to that particular meeting. However, they do not have the right to. Now, someone had asked, they had raised a question about the invitees to the audit committee meeting. So maybe Sudhakar sir and Savitri ma'am, a brief discussion on this. Who all can be the invitees, and can only the auditor, the statutory auditor or the secretarial auditor also? Someone had raised this query earlier.
Yeah, absolutely. The secretarial auditor can also be invited to the meeting. There is absolutely no bar. And in fact, it is a good practice to have the secretarial auditor invited to the meeting of the audit committee, especially when the secretarial audit report is discussed by the audit committee. And I would say that at least once a year, it is a good practice to invite the secretarial auditor to the audit committee. Internal auditors, in any case, should be there throughout the meeting Statutory auditors should be there throughout the meeting. The CFO should be there. Of course, the CFO would be attending, company secretary, and in fact, it is a healthy practice to also invite the concerned business heads for discussion on the internal audit report of that particular business, so that they get to know as to the requirements of the directors and what is the expectation of the directors, what are the different points which come up in terms of processes. Internal audit department is not responsible for the processes being established. It is responsible for ensuring that the processes are robust. The internal control system should be robust. But with respect to the business process, it's for the businesses to basically define it. Audit team will ask as to whether the processes have controls and checks and balances. It's not just make a checker, but in terms of even the process controls, the entire, procure to pay or cash management, all these should have auto generated controls so as to ensure that the fraud risk is completely mitigated. So these persons should also therefore be there as invitees at the audit committee meeting. But of course, one meeting of the audit committee should be without the presence of the management, and that meeting, the auditors can still be invited. And if the internal auditor is an external party, he or she can also be invited. But the separate discussion of the audit committee with the auditors is definitely to be encouraged. Yeah.
Now, on this matter, the power to investigate into any matter referred by the board. Sometimes the board specifically refers certain matters to the audit committee. There is a related question I see Savit Rao has raised, that how do you establish that the reference by the board to the audit committee is not restrictive in any manner? The objective here would be to have independent directors using all their independent faculties.
See, when you are referring a matter to the audit committee for investigation, the reference would be to investigate into ABC. It's an incident which you want them to investigate. The reference cannot be restrictive, and rather the reference will not be restrictive. If it says only to investigate with respect to a particular part of so and so, then it would be said to be restrictive. Let's say, for example, if it is in the context of procurement of catalyst, that is not restrictive. The catalyst may be a high value item, and you're asking the audit committee to specifically investigate into the particular incident which has been specifically given to the audit committee to investigate. Now that is not a restrictive point, but maybe if little more facts could be supplied as to what exactly is referred to in this as restrictive. The powers to summon persons who are handling it is inherent. When you ask a person to investigate, he would have the right to call people and ask questions. Those persons who are called will be obliged to give all the information as are in the possession of those respective persons.
Yes, Badal, go ahead.
Yeah. So now we'll look at some case studies. This is one case decided by High Court of Delhi, Vishal Dhiren Shah. The names have been hidden. We can look at this as company R is the subject of the audit. There is one audit firm W, the joint auditor, who raised concerns, and there is this petitioner firm P, the co-auditor. Now, the company R underwent a joint audit by the audit firm W and the co-auditor, the petitioner firm P. What happened that firm W issued a letter to the company, the audit committee, and the petitioner P, the co-auditor, highlighting concerns about the loans disbursed to the company were further loaned to group companies without adequate explanation of the rationale or their recoverability. So W resigned. The other co-auditor, they continued and submitted their audit report claiming no irregularities. A suo motu examination by NAFRA revealed that P failed to address the unresolved issues noted by W, including the concerns about internal controls and use of such loans and their recoverability. So what the court decided, what happened in this case, that NAFRA debarred the petitioner firm, the audit firm, for 10 years from being appointed as an auditor and imposed penalties, noting that he dismissed the fraud claims reported by the other auditor. Then there were the concerns regarding the balance sheet were highlighted and how the valuations of accounting standards were made, and the charges against the petitioner firm for non-compliance with auditing standards were substantiated and no interim relief was provided. So this is how NAFRA can, take action on account of such kind of non-compliances and audit standards. And just think that what would have been the role of audit committee in such a scenario. And we just looked at the slide on the powers of the audit committee. Was sufficient investigation done? And how the auditors were appointed, how the auditors' discussions were done. So this case throws light on these kind of matters. Another case study we have, it's a case of Ghanshyam Pandey versus Union of India in the High Court of Delhi. Here, the liquidator of this company discovered that substantial funds lent to the company by banks were routed through foreign group companies and siphoned off, leading to a directive for SFIO investigation. So over rupees 100 crores were transferred to these related companies with significant loans outstanding to public financial institutions. So what SFIO did, it issued a LOC, lookout circular against the petitioner. The petitioner, Ghanshyam Pandey, happens to be the whole-time director and member of audit committee. So the petitioner sought to quash the LOC. Was it allowed? No. So it was when the investigation by the SFI was ongoing, so it was reported that financial claims against S amounted to a whopping sum of 100,770 crores. And then the status of this petitioner, that he being a whole-time director, he was actively involved and also as an audit committee member. So the court ruled that the LOC should remain in place and to protect the ongoing investigation and public interest. So this is how the superior courts in the country has taken view of such matters. Now we come to the next part of this discussion, which is about how the meetings of the audit committee need to be conducted. Now here, if we look at section 177, so that does not speak about the conduct of meetings. However, you have to interpret the same from the SS1 on the meetings of board of directors, which is mandatory. And it says that the principles enunciated in SS1 are also applicable to meetings of the committees of the board, unless otherwise stated therein or stipulated by any other applicable guidelines, rules, or regulations. Now here we can stop and maybe ponder over, in your case, in your particular organization, are you a company regulated by a specific sector regulator, or anything is prescribed in your own articles of association, or you are a listed entity subject to LODR regulations? So accordingly, you will decide how the meetings of your committee meetings have to be conducted, what would be the quorum, what would be the frequency of the meetings. The important paras of SS1 I have highlighted, para 2.2, that committee shall meet as often as necessary, subject to the minimum number and frequency prescribed by the law or any authority, or as may be stipulated by the board. And about the quorum, unless otherwise stipulated in the act or the articles or any other law applicable to your company, the quorum again will be as which is specified by the board. And if no such quorum is specified, then presence of all members of the committee is necessary to form the quorum. So anything we would like to discuss here, Savitri ma'am?
Mridul, in the last webinar where we had this board meetings and committee meetings, we discussed this at length.
Yes.
So considering the time factor, you please move ahead.
Sure. And another important aspect is about the monitoring of vigil mechanism by the audit committee. This role has been particularly given to the audit committee. Vigil mechanism, the companies which are required to constitute an audit committee shall oversee the vigil mechanism through the audit committee. And in case any member has a conflict of interest, he shall recuse himself, and the other members will deal with the matters in hand. Now, what about other companies where the audit committee is not required to be formed? So then the board shall nominate a director to play the role of audit committee for the purpose of vigil mechanism. And the vigil mechanism has to make a provision. The policy, there has to be a specific provision for direct access to the chairperson of the audit committee in exceptional cases. And such details are regarding the vigil mechanism in your company. They are required to be disclosed on the website of the company, if any, and in the board report. So this is besides the other functions we saw. The overseeing the vigil mechanism in your company is another important role to be played by the audit committee. And then certain disclosures in the board are mandatory. The composition of audit committee, and where the board has not accepted any recommendation made by the audit committee, then the details of the same with reasons has to be disclosed in the board report. So with this, we are done with the discussion on audit committee. We can take up any questions later on. Let's proceed further with the NRC, which is the provisions for which have been contained in section 178, read with rule 6 of the company's meetings of board on its past rules. Again, on similar basis, we see that the board of directors of every listed public company and the following classes of companies where the turnover, paid up capital, your outstanding loans in aggregate, they meet the thresholds. So here you need to constitute an NRC. However, here besides a specified IFSC public company, even a Section 8 company is exempt to constitute NRC. And in case you are part of a government company, certain provisions do not apply to government companies as well. Now, how do you see the composition of NRC? Here, the significant aspect is that if 3 members are supposed to be there, then minimum, then all the members of the NRC have to be non-executive directors, and out of which at least half of them shall be independent directors. Sometimes, or maybe most of the times, the chairperson of the company is also a member of the NRC. So what if the chairperson is not a non-executive director? So in such cases, it has been provided even if the chairperson of the company is an executive director, however, he may be appointed as a member of the NRC, but shall not chair the NRC. Because the chairperson can always be a non-executive director. Then the chairperson of the NRC, or in his absence, any other member of NRC authorized by in this behalf shall attend the general meetings of the company. So someone had raised this question. I didn't take it up that time, but I hope this answers that that about attending the general meetings of the company and answering the shareholder queries. This is the provision. Just like we looked at how meetings of audit committee have to be conducted, similar way the meetings of NRC. So I am not repeating it. The provisions stand the same in case of all the 3 committees regarding the conduct of meetings. Now we look at the functions of the NRC. So section 178 subsections 2, 3 and 4. Specify that the NRC shall identify persons who are qualified to become directors and who may be appointed in senior management. So what is senior management has been defined by way of explanation to the section. It means the personnel of the company who are members of its core management team, excluding the board of directors, and comprising all members of management one level below the executive directors, including the functional heads. So the definition is very clear. Then the NRC shall also lay down the criteria for such appointments and make recommendations to the board accordingly. Further, the NRC shall specify the manner for effective evaluation of performance of the board, its committees and individual directors. We need to understand that the word is to specify the manner for evaluation and not to carry it out, because the evaluation can be carried out not only by the NRC, it also by the board itself or by an independent external agency. And so here, Sudhakar sir, now you yourself, we are delighted you yourself are doing this activity regarding the performance evaluation. So any insights you would like to provide here? That what is the role, actually the role of NRC in the implementation and compliance for such performance evaluation?
See, again, here, the way when we say audit committee member has to have the training in financial related aspects. Similarly, when you are appointing a director as a member of the NRC committee, he also required the orientation that how to set up the remuneration policy. Similarly, out of the anxiety to please the management, if you are tightening the increment policy or promotional policies and all, obviously the attrition rate will be more. You should be able to retain the talent, you should be able to attract the talent. So, how the remuneration is to be fixed. Similarly, how the directors are to be selected, independent directors. What is the composition of the board? What sort of skill sets are required? And similarly, when you are selecting and appointing a director, removal of such director is not that simple. It's going to be a long-term relationship for next 5 years. So you have to see not only the seniority, wisdom, maturity, experience, and expertise of the person, but compatibility of that person with the existing directors and the committee members on the board are also equally important. The compatibility is very much required. And similarly, the character and conduct of the person is also equally important considering the image of the company. So there are all these things are to be seen. Sometimes it may so happen that kind of skill sets might be there, might not be there, because you may not get a ready-made product off the shelf. Sometimes you have to also, train the people over a period of time. So this is how I look at it in case of NRC, especially even board evaluation. Suppose board evaluation, whether NRC does it or the board does it or they take an outside this thing, it is up to them. But suppose if the responsibility has been assigned to NRC, first and foremost thing is they have to understand what is the board evaluation, what for it is, what is the fundamentals of that. In fact, one of the assignments what we have handled, and the board has done this thing, but they have asked us to do a third party evaluation. Obviously, the rank and the recommendation given by them internally, it may not go with the same with us. Sometimes they get upset, how come that we evaluated somebody in a particular manner. So we want to take pains to explain to them what exactly is board evaluation. It is a perception. When you are evaluating a person, it is a perception. So perception differs from person to person, but at the same point of time, you have to have a proper rationale for your evaluation of the person. That you have to record it. So these are a few thoughts of mine. Savitri, you may add it to further to that.
No, no, I fully agree with what you're saying, and in the interest of time, we can proceed because what you also mentioned is in the context of the dimensions which we need to consider. It's not just a one-liner saying yes, it has been evaluated. What are the parameters considered? How exactly has that been done? Because there's also an obligation on the independent directors when they talk in terms of evaluation of performance of the whole-time directors. So these points do become relevant, and therefore the methodology which would be adopted, which is a brief of the NRC, is something which will be borne out of the minutes of the NRC. And I'm once again emphasizing on minutes because these are documents which will speak for themselves.
In
Over
fact,
to you.
in case of the listed companies, if you have seen the amendment which come very recently, NRC's role has been given very, very high responsibility, especially they are talking right at the time of the recruitment, the skill matrix, analysis, the suitability and the recommendations, and again, long-term things, sustainability, all the things which has been actually given in the recent amendment which has come in the listed companies, it is most, that is one. And one more concern I want to raise both of you. But although we talk about recruitment and people etc. and all these things, most of the things what happens is although we have the registration of the independent directors etc. Many times in most of the companies, these are all they don't want to bring altogether a new person outside. It's all they wanted to get to known person. Why to bring unnecessarily a person who's unknown to us? So it normally goes to the known people, word of mouth, etc. That is what it happens. What is your view on that?
See, there are 2, 3 points here. One is the skill set should be the main determining factor. Talking of someone who's known, now, independence, of course, it's a cliche to say that independence is in the mind and not the person concerned. So that is, of course, there. The question is, what is the standing of the person in the society? And what one has to understand is, when you take an independent director, are you taking an independent director merely to comply with the provisions of law, or to be able to provide you proper guidance in your governance mechanism in governing the company? If it is the latter, you would definitely choose a person who's going to add value. If it is not the latter, then the business itself is going to suffer over a period of time, because you're looking at an old boys club which will definitely have its own problems. If everybody is just going to be working on groupthink and saying yes to everything that's placed before them, they are going to harm the company as well as themselves, because they're not going to be governed based on what is right for the company, but in terms of saying somebody else has decided, let's all support it. That does not mean that the independent directors would be saying no to everything that the management brings up, but they're going to add those questions to see that the decision taken by the company is robust. It is not that the management's decision should be double guessed, but the management's decision should be made more robust by asking the right kind of questions in terms of the strategic issues with respect to business. For example, if it is a product, the directors can always ask questions like, has the product life cycle and the tenure been considered? Are there any competitors internationally? Is this technology new in the industry and in the country? So that you get to understand whether you're positioning based on first mover advantage or otherwise. Now, just because questions are asked, if that's not really considered as a welcome thing, or if the directors do not feel comfortable to be asking questions at the meeting, then it will be difficult for them to function in a proper manner. So, talking of getting people who are known, so long as those persons are independently able to decide and raise questions to be able to make the governance more robust, there is no problem. Otherwise, yes, it will lead to an issue. Having said that, completely an unknown person with whom you have absolutely no interaction, neither would that person feel comfortable nor would you feel comfortable. So, what is the best way forward? What you do is, even if the person is not known, have 2, 3 rounds of discussions, because when you recruit a senior person in the organization, you may not have known that person beforehand, but you have those rounds of interviews where you see the comfort factor. With respect to a director, you're giving that person a fiduciary position. The hat that the person is going to wear in the boardroom is one which carries a lot of responsibility. Comfort from both sides is very important. And therefore, if you don't know the person, you're not very familiar, there's nothing wrong in taking such a person, provided you've had rounds of discussion to understand. But yes, just taking people because they are good friends will not be in the interest of the organization, nor will it be in the interest of the person concerned, because the responsibilities are going up. One of the important roles, digressing from that point, one of the important roles of the NRC while selecting a person is to check whether he or she has a DIN, because without the DIN, the person cannot be appointed. So, those legal points should all be covered as a checklist beforehand when it comes before the NRC for a decision. Over to you.
Yes, Birdul, go ahead. I think we are already 12:30.
Yeah. So now we look at a case study. This is a case where the appellant company, it's a public limited entity with a very compliant board structure with their independent directors. However, two independent directors' terms were set to expire on a date 12th August 2024. So, as per the process, the NRC recommended the appointment of SS as an additional non-executive independent director, subject to shareholder approval via a special resolution at the forthcoming AGM, which was held on 10th August. So the appointment was made, and while it received the approval of the AGM, the BSE and the stock exchanges imposed fines for non-compliance with Regulation 17(1)(a) of the LODR, claiming that the prior approval by way of special resolution was necessary due to SSS's age being 75 years. So this is the provision in focus. However, please see that the recommendation is coming from NRC. So what happened in this case? That of course the board, I mean the SEBI, then decided that how, that it looked at the facts and that the additional director was appointed within the next AGM, the vacancy was also filled, and it also looked at some decided cases and said that the prior approval requirement for this special resolution is not necessitated by the regulation 17(1)(a). However, only a special resolution is required and it not necessarily be a prior approval. So this is fine. I mean, on one hand, the SEBI clarified a particular provision under LODR. However, why we are highlighting this case for participants is that what could have been the role of NRC in such a situation? Now, I would like to dig deeper and ponder over the fact that if NRC is supposed to compose of only, say, non-executive directors, what are their skill sets, and this has not been provided, but are they supposed to be themselves experts enough to understand that when they recommended the appointment of SS as being 75 years of age, was it the responsibility of NRC to also, while making recommendation to the board, to clarify on the procedure under the LODR? Or was it the responsibility of the board so that the fines, I mean, they would not have reached the stage of the fines being invoked? So this is a moot point that maybe, we can think about the role of NRC in such cases.
So while the NRC is just recommending, when it goes to the board also, the board would be seeing this. However, having said that, from a compliance perspective, typically the NRC would also note the age of the person and the requirement, but the recommendation is only, technically the recommendation is only with respect to the person possessing the skills and is fit for appointment. Whether legally the person can continue because he's nearing 75 years of age or already 75 years of age is to do with the date of appointment and the manner of appointment. So that technically actually is left to the board. Here, NRC is only supposed to say, here are the 5 people who we have shortlisted, let the board then decide. Or here is one person who we feel fits the description of skills which are required to be possessed by a director of the company, and we recommend his or her appointment. And they would be guided by the policies of the company, the diversity policy, or with respect to the attributes which the director must possess. And therefore, they are merely recommending. They are not saying, of course, if they recommend a person who's already 76 years of age, they will specifically mention with respect to the appointment coming into effect only after the shareholders have approved. But once again, technically speaking, it is for the board to decide.
Okay, so now
Rightly so also know that see by merely constituting the committee, the board cannot evade its responsibility. Constitution of the committees is just to examine the issues related in depth and then to recommend to the board so that the board can examine it further before taking an informative decision. So whether they examine that or not, at the end of the day, it is the directors of the company who are responsible, whether independent directors or executive directors. depending upon the issue, depending upon their role. I mean, whether they acted diligently or whether they acted negligently, all these issues will be there. So that is the reason actually board has to keep a constant monitoring aspect as far as the committees are concerned. That is the reason why the minutes of the committee meetings are presented before the board. And whenever, as a director, I am within my rights to question the chairman of the respective committees if I have any issue as far as those committee minutes are concerned. If, as a director, I'm not even reading the minutes of those committees, I'm just attending the board meeting, taking care of only the main decisional issues, in taking others are only noting purpose, then I'm not discharging my responsibility as a director. That's why several times when I train the directors, I say that don't take the directorship as a vocation. Don't take the directorship just for your earning a few lakh rupees or something like that. It is much more than that. If you are taking up it seriously, take it up. Otherwise, don't take it up at all. Prepare yourself before accepting a directorship. Otherwise, you will be in trouble.
Yes, Mridul, go ahead.
Yes, sir. Yeah. So now the last segment, which is the Stakeholders Relationship Committee, Section 5 of Section 178 specifies that if in case a company consists of more than 1,000 security holders, they might be holders of shares, debentures, deposits, anytime during the financial year, then the board shall constitute the SRC. Again, the specified IFSC public company and Section 8 company is exempt. So SRC, we understand that as the committee that manages the investor relations, the composition here is such members as may be decided by the board. It is completely at the discretion of the board. However, the chairperson has to be a non-executive director. And regarding the attendance at general meetings, it's the same as NRC. The chairperson himself, herself, or any other member of SRC authorized by him in this behalf shall attend the general meetings of the company to answer the shareholder queries. So meetings, the same as we saw for audit committee, NRC, SRC also, meetings have to be conducted in terms of SS1 or as may be prescribed by the board while setting up these committees. The main function of SRC is to consider and resolve the grievances of security holders of the company. Now, these grievances may be n number, they may include complaints like those relating to transfer of shares, your IEPF related matters, refund claims, non-receipt of balance sheet or non-receipt of dividends declared by the company. All such complaints are supposed to be handled by the SRC. Now, while I was making this PPT and at the end of it, I was wondering just this function, just one liner, whatever we looked at, the terms of reference of audit committee and all of that. But however, does this short one sentence curtail down the role of SRC? In my opinion, not. So, Savitri ma'am, you being at the helm of Reliance Industries, very touchy about the shareholders of Reliance, we have heard this company. So, what do you feel? I mean, resolving investor grievances and the role of SRC, how significant it is? Some brief words of
So,
wisdom from you.
in case of an equity listed company, this committee is very, very important because resolving the grievances is a one simple sentence. And as you rightly said, while it is one single sentence, the scope has been well encapsulated in this one sentence because grievances could be with respect to receipt of dividend, receipt of annual report, receipt of queries with respect to the annual report, questions that they may want to raise at the annual general meeting with respect to the financial statements. So there could be several with respect to this. It could, with respect to debentures, it may be on interest, redemption. It could just be a general query as to when the meetings are going to be held. Of course, now with listed companies, you have everything put on the website of the company. Now, going by LODR, if your debentures are listed and if it's a high value debt listed entity, you need to have an SRC. So it's quite possible that your debentures, you have only maybe one debenture holder or two debenture holders, but you have an SRC in line with what is there in the provisions of Companies Act, which is very similar in case of SRC with LODR. However, in the terms of reference with respect to listed companies, the LODR has more sentences in the description of terms of reference. While I would say that this one sentence is sufficient, there, in case of listed companies, LODR says that you need to take steps to encourage participation of the members in voting. So this particular provision is also finding a mention in the circular of MCA with respect to VC and OAVM, which actually started during the pandemic. So, what are the steps taken by you to encourage people to participate, whether at the meeting or exercise their e-voting? This is basically because the retail investors have a very poor rate of participation in the meetings. Also in LODR, there's a very specific provision as to how the company can reduce unclaimed dividends so that it does not go to IEPF. It does not speak in terms of IEPF, but unclaimed dividends going down so as to facilitate the shareholders. Now, these are also covered, in my view, in this sentence which says resolve grievances, where a person says, I've not received the dividend. Should you now, grievance presupposes that you have a complaint. Now, in LODR, they said take steps to reduce, which means you're taking proactive steps. While one can say that, as per Companies Act, it's only a reactive one, that's not actually the intent. Take proactive steps so as to ensure that you don't have to react at all because everything is well provided beforehand. And it's also not specifically provided in Companies Act because if you have a smaller number of shareholders, you don't have so much of an issue. And of course, if you do have an issue, it will definitely be a grievance. But if you look at it in terms of ensuring that you don't have a problem, you will not have any complaints to resolve, and that's the way you would look at it. So just to sum up, this one sentence of consider and resolve grievances is one which encapsulates the entire gamut of issues concerning security holders. What normally does happen, if it's a good company which has been regularly paying its dividend, interest, as the case may be, you will have no queries coming up. But if it is one where there has been something which has been skipped, for example, a company which is not doing very well financially, you will have more grievances where you specifically have the SRC. And when you refer to grievances, it will also include litigation with respect to securities, where you have an oversight.
So
Somebody has
just
put up
to
a
add 1 or 2 points more for that is, in fact, several people think that this is the most insignificant committee, according to me, which is not so. The reason being, the one of the responsibilities of the directors and in particular independent directors is to take care of the shareholders, in particular the minority shareholders. Several times it happens that whenever they have issues, they approach the companies, but nobody listens to them. Company may be appointing an R&T agent and R&T agent for them, day in, day out, only receiving complaints only. They may not be attending it. So several times it depends upon the company's image also is there, that as Savitri has rightly mentioned, how many complaints you are receiving it, how many complaints are pending. In fact, in SRC committee, in Reliance, directors used to say, by how come that there is no complaint pending? So they used to see that the R&T agents of Reliance used to make a presentation to the SRC committee, giving full MIS to them. How many complaints received, what is the nature of the complaints, and how the complaints were resolved. And in fact, several times we used to have very ambitious and aggressive time limits to the R&T agents to resolve the issues of the shareholders. Suppose, say, for example, if Companies Act says within 15 days the transfers have to take place, we used to say, no, not 15 days, only 5 days it has to take place. Something like that. In addition to that, it also depends upon the company and the company secretary, how they are taking care of the shareholders. In fact, if any the participants might be not, I mean, aware of that, Reliance used to publish the shareholder referencer in every annual report earlier. And now I think they're putting it on the website, because publishing it is also a very costly affair. But if you see the shareholder referencer, every aspect as a shareholder or a security holder, how you are concerned with, those issues have been addressed in that. Why you have to demat the shares? What are the advantages of dematting it? Why you have to give your bank mandate to receive the dividends in electronic mode? By merely repeating the statutory provisions is not sufficient. What are the advantages out of it to the shareholder concerned? That is what it is explained in the shareholder reference. In fact, for all the company secretaries also, if you want to know the how the R&T agent is to be put on place and then how to examine the R&T activities and all, it is a good learning point of the shareholder referencer of RIL. Yeah.
Absolutely.
Thank you,
Yes,
sir.
Mridul, go ahead.
Yes. So then the penal provisions, someone had raised a query also. So you we clarified that these are the current set of penalties that can be levied on the company, penalty of 5 lakh, and every officer of the company who is in default, liable to penalty of 1 lakh rupees. Especially for SRC, in case of inability to resolve or consider any grievance in good faith, shall not constitute a contravention of this section. So, as an instance, there is this recent case of Resonance Eduventures Limited, a total penalty of 14 lakh rupees for failure to constitute AC audit committee, and an RC was levied on this company and the officer in default. So, uh, though the application was made by the MD CEO in this case to address the non-compliance, however, the ROC didn't pay heed, and there were reasonable cause to believe that the provisions of 177, 178 were not complied with, and this is how the penalties were levied. Maximum penalty under the Act, and this demonstrates that how to mitigate such risks, the company should prioritize a comprehensive compliance framework, and doing things right the first time should be the principle. So there are umpteen such examples, where maximum penalties have been imposed by ROCs for failure to constitute committees as prescribed. Some legal aspects I have highlighted. Time commitment is very important. See, the ultimate aim of forming committees is that where the board is not able to devote time, however, the other experts are able to devote sufficient time. So there is a limit on membership of the committees. Under LODR, there is a limit of not more than 10 committees or acting as chairman of more than 5 committees in case of audit committee and SRC across all public companies. However, for other companies, you can look at the limit placed on the directorships that a person can have under the Companies Act. So maximum 20 companies, 10 public, maximum 7 listed entities, and if MDW, then maximum 3 listed entities. This accordingly, defines how you can also then further be a committee member. So again, as the director has to inform about his committee positions to the companies and also notify the changes. And regarding statutory disclosure, the annual return. So this is a thrust on accountability of the board, that the particulars regarding the committees of the board, the meetings, the attendance of members, they all have to be disclosed as part of your annual return. So with this, we are done with the presentation. And
And
maybe we can.
Mridul, you have mentioned about the time commitment for the committee meetings. But I say that on the top of everything, the training aspects as far as the members of the committees are concerned. Because unless until the committee members are trained for the intended purpose, they will not be able to discharge their responsibilities effectively and efficiently. In fact, the if you see the law, whether it is Companies Act or whether it is listing regulations, the legal provisions are making stringent day by day. At the same point of time, the regulator also is very active as far as the implementation is concerned and the penal provisions stipulations are concerned. So considering this, a time has come both for the company secretaries as well as the directors to take things seriously. And sometimes it may so happen that everything everybody may not be able to do. Some kind of expertise is required. That is how that skill sets need to be improved upon by way of training aspects. So, in fact, whether we are as students or as budding company secretaries or chartered accountants or even directors, We need to get trained properly. That's always, I give a lot of importance to that. In fact, in IOD, where I go as a faculty, Savitri too comes there. When at the end of my session, several times it happens that the budding people say, I mean, that the director says, sir, really we have to think seriously whether to accept a directorship or not. So मेरे को एक दो दफा आईओडी वालों ने बोला तो सर इतना मत डराओ लोगों को. मैंने कहा मैं डराना नहीं. Whenever you are going to take a deep dive into a swimming pool, you need to understand the depth of the pool. Without that, if you take a deep dive, obviously you are going to, I mean, commit a major fatality. Same is the case with directorship also. Without properly equipping yourself, without understanding that, if you think that you will be getting a good visiting card, you can flash it everywhere. You are attending board meetings by wearing suits, jackets, and all. That is not the one that was there at one point of time. Whereas, as on date, the directorship is most what's called as burdensome, according to me. One need to prepare for that. And time commitment is required. At the same point of time, upgradation and updation of skill sets is also equally required. That's what my concluding remarks.
Okay, let us go through the questions. Many questions we already answered, but let us go through. Committee formed under section 179, delegation of the powers, whether such committee, this I think we discussed. I don't know, somebody has actually put it here. I'm reading it for it. I don't know what he means actually. It is a waste of time only just a discussion this you arrange in this seminar. I don't know what he wants to say this. The people.
So two people are raising hands since long. Should we invite them first?
No. This will finish it off. Whatever there, then we can talk to them.
Okay.
Whether the AC or NRC, presence of the statutory auditor, secretarial auditor, yes, that we spoke about it.
Sure.
What is the expectation of NAFRA with regard to audit committee? I think you elaborated with the case laws, etc. on this. If the independent director tenure is over, who will be the audit committee chairman? Can an additional director who is appointed by the board and until the postal ballot is done, the meeting in that additional director appointed so that it can become a chairman of the audit committee and other committees? And with the cessation, will there be a reconstitution of the committee, which she was a member of the chairperson?
There's absolutely no bar on an additional director being appointed as the chairman of the committee. Of course, unfortunately, if he does not get appointed in the postal ballot, if the postal ballot does not go through, he will cease to be a director, and in which case he will cease to be a member of the committee and the chairperson of the committee. The committee will need to be reconstituted. But while he is just an additional director, he can certainly be appointed as the chairperson of the committee, as a member of the committee and the chairperson of the committee. There is absolutely no bar.
PSU director, I think that question we have answered actually. Best person chose the committee, that also you answered. What can the audit committee composed of the artist decide to the company taking the debt from the banks? I think this elaborately you actually discuss when we are inducting the people who are of the different faculties, what need to be done, etc. So they have to get this. This will not deliberate on that. Whether the wholly owned subsidiary company who are exempted having the audit, NRC, CSR committee need to follow the provisions in case they form such committee voluntarily, including disclosure in annual report and director's report.
So, once you form these committees, although it is voluntary, you must disclose it because it is a statutory committee. Statutory does not only mean that it is only wherever it is applicable statutorily. Of course, those companies need to necessarily have. But if it is not statutorily required and you have constituted, going by the secretarial standards, you will be required to comply with all the provisions of secretarial standards. And I would say disclosure should also be made.
Increase in the sitting fees to the director need to be recommended by the audit committee considering as a related party transaction. I think sitting fees is not the related party transaction. It has been clarified actually.
Absolutely.
How can the audit committee ensure the related party transaction are at arms like this? You spoke actually. How do you establish the A reference to the board of the audit committee is not restrictive. That question also, I think, you elaborated. Post-facto approval, ratification, that also we discussed about it. Companies Act 2013 provide power of the audit committee for ratifying, while listing regulation does not contain any such provision. In case of the listed entity, all transactions need to be approved prior. Kindly clarify on this.
That's absolutely right. And I think I already covered this when I said that in case of a listed company, related party transactions have to be approved prior to the transaction. Prior approval has been mandated.
Have there been any instance of the audit committee members being penalized in the litigation in the history? Yeah, it is there. You need to go through the ROC, lot of empty orders are there actually. If the internal auditor is invited to the audit committee or they are the permanent members of the audit committee.
So they are permanent invitees. I mean, they are always there. They are invited to the audit committee.
Yeah, members are only the director. They cannot be
That's
a
right.
members of the
They are
audit
not
committee.
members.
Yeah,
That's
they
right.
are only inviting. Yeah. Is it possible that in one of 5 audit committee meeting, internal auditor is not invited even as an invitee?
No, it's not possible. It is not a right practice.
Can anyone suggest made by the statutory auditor, secretary auditor need to be dealt within by the audit committee member?
See,
These
1 minute,
are
see, out of the, just 1 minute, Savitri. Is it possible that in one of the 5 audit committee meetings, internal auditor is not invited even as an attendee? So I presume that 4 meetings are for the quarterly results and 1 committee might be for some other reason. Where internal auditor is not required in that particular committee meeting, if you have not been invited, no issue. It is
yeah. If it is
not like
not
internal auditor is having an inherent right to attend the audit committee meetings. It is not so.
So, yeah, if it is not concerning the internal audit related one, then it is okay if he's not invited. Let's say, for example, if it is, see, it could be not relating to internal audit, but if it is, let's say, review of functioning of subsidiaries, there may be issues from an internal audit perspective on this also. But if it is something which is not relating to internal audit or internal control processes at all, then it is okay if the internal auditor is not invited. But it is normally not done. He's normally invited for all audit committee meetings.
In committee meeting, in attendance is only the company secretary or CFO name can also be mentioned. Invitee, CFO, statutory auditor or secretary auditor. In committee meetings,
Name is mentioned.
no.
Name is always mentioned,
See,
and the designation is given as CFO or CS.
Like
So
companies,
here this
like
person is asking in attendance or as invitee.
company
The
secretary is always in
he's asking
attendance
the
in the meeting.
Attendance. That's right.
Other people are actually invited. That is what I would think.
Correct. Correct.
yeah. This is what he's
in
asking.
SS1, it is
He has
very clearly mentioned about this.
It will be a great idea to discuss some orders of the ROC where disqualifications were actually noticed and how come forum can determine action points and avoid such penalty expression. Savitra, for your information, we had one of the session exclusively on the adjudication orders, not only concerning with the MCA, but also listed agreements, etc. Recorded session is available. You may like to go through it actually. The related party transactions approved by the audit committee and board headed by the very senior members in the industry based on internal processes and applying their wisdom. Can a secretary auditor can examine validity of these transactions other than the procedure adopted?
So it's not about validity, it is about checking whether the legal provisions have been satisfied, and in the process, some factual details may be called for. It's not just about the process, you will also be asking for the factual pieces to see whether you have complied with the process. And if you have not complied, validity can certainly be questioned. What the senior persons in the organization are doing is saying that this is the party from whom we feel we are getting the right things. The secretarial auditor can ask you, how do you determine arm's length price? Who are the other competitors who are in the similar market? So that's not about double guessing, but it is in the performance of the duty.
For a private company which is not required to form an audit committee, but pursuant to the conditions of the shareholders' agreement, the private company formed the audit committee in the name of the Audit and Risk Committee. whether Section 177 and SS1 shall become applicable to such committee.
So at the time of constitution, if you have just said that this is the brief, then it's a different issue. Otherwise, if you're saying, although the company is not required to appoint an audit committee, we are constituting an audit committee, then it becomes one which I explained a little while ago, going by secretarial standards, you would be required to comply with it.
You solicited, it is
Not only
observed.
that, Bala, if you may clarify that in one or two adjudication orders of ROC, I have seen that where you are constituting these committees voluntarily, and you are mentioning in the board report that there is an audit committee, there is a NRC and all, that they have not complied with these relevant sections, and they have taken that the company is supposed to comply with those sections. Even if the committees are voluntarily, but you are representing as if you have those committees. How anybody will come to know whether you are having that legally required, not required, and all those things. If I am not wrong, that is there. So it is better, even if it is a voluntary committee, comply with the rules.
And sir, good shareholders agreements are drafted in a way where elaborate provisions are inserted by lawyers, which are also incorporated in the articles. So then the articles prevail in this. So that's how.
Yeah.
It is observed that when the company is doing well, more deliberation of the audit committee, and when not doing well, less deliberation, whereas it should be vice versa. And
That's a comment. Okay.
Yeah, whether the executive directors of the company will be counted for the purpose of 3 minimum members of the NRC.
Executive chairperson can be a member of the NRC. However, he cannot be the chairman of the NRC, as was also mentioned.
If the company has have only 3 members, including chairperson of the NRC, and one agenda in which one member is interested himself and he rescued himself, and that particular agenda is dealt by the 2 members only. One is executive director, one is non-executive director. Is it the compliance to the provisions of the Act or the LODR?
So, going by the item, out of these two, are they interested? Will be the first question. If they are interested, one single person cannot form quorum and you cannot proceed with it.
Like he says, out of 3, one is actually interested, so he rescued. And the other 2 is, one of them is executive director, one of them is non-executive director. That is what he is saying.
Doesn't matter. It is a sufficient quorum, but they are both are non-executive directors. I mean, sorry, that both are non-interested directors, and even executive director can be a member. So it is a sufficient quorum.
Okay. In one of the large listed company, the prominent business group, the audit committee was expected to evaluate how management monitors the compliance with the company's risk and management policy and procedure. It is not the role of the management committee, which is the company is constituted as per SEBI LODR. Secondly, do we agree that it is not a good practice when the audit committee and the risk management committee have the same members and chairperson?
So, if they have the same members and chairperson, there is no problem at all. The terms of reference are very different, and that's what is important. Talking of the role of audit committee and RMC, audit committee, even under Companies Act, which is also the same even in LODR, one of the functions of the audit committee is to evaluate the adequacy of the risk management system. The risk management committee has a much larger portfolio with respect to risk. It not only has to look at the risk management system, it also needs to see the risk management policy. It needs to see the framework which has been put in place for identification of risk, mitigation of risk, and also, it has to then keep reviewing the risks. So therefore, the role of the two committees are completely different. When you look at risk management system, you're going to be seeing the overall aspects as to whether you have a proper process put in place, whether the policy has been clearly defined, and whether there are any residual issues which are affecting it. So that is the reason the two are completely distinct and not overlapping, while the wordings may seem to be just the same.
Who can preferably invite it to NRC, like a statutory auditor, secretarial consultant, head and HR consultant?
So the HR consultant if the item is one which requires his expert advice, you can certainly invite as a third party who's invited. But uh, for preferable invitees to NRC, it depends on what the item is. The statutory auditor is not a permanent invitee to the SRC. I'm sorry, NRC. Secretarial consultant also. See, depending on the issue, you may invite anybody. But the statutory auditor, secretarial consultant, headhunter are not normally specific invitees to the NRC unless the item is one which requires their presence.
A company have only two independent directors. Both are members of the audit committee along with one more director. Accordingly, total member of the committee was 3, with the majority being independent director. Suddenly, one of the independent director resigned because of the other professional commitment. The company is in the process of identifying the new independent director. However, in between, there is a need to holding the audit committee for approving the quarterly accounts. The audit committee not validly constituted, with majority being IDs because of the ID tendered resignation. How to proceed in such situation?
You cannot proceed, you will have to constitute, and only then can you proceed. Otherwise, the audit committee is not properly constituted for it to have proper quorum to take it forward.
SRC is supposed to protect the interests of the minority shareholder. What does this mean particularly? I think Sudhakar has elaborated on this. In the recent time, it is seen in the Indian millennium, most company decisions are getting vetoed by the proxy advisory firms, and their link is increasing day by day. It may result deterrent and breakdown in the management. I would think it's the right time to have the separate provision for the rights of the duties of these proxy advisors as a class. What are the views of the host and panelists?
So actually, proxy advisories, this is something which is an international phenomena also. So, in India, it's been happening now for the last few years. They're looking at it more from a governance perspective, and therefore sometimes they don't go strictly by provisions of Companies Act or LODR and have more conditions. What needs to be done is understand their policy, understand the manner in which they normally give their recommendation, and ensure that the explanatory statement covers these points also. Like, for example, going by provisions of Companies Act, if it is a case of appointment of an independent director, you would ensure that all the provisions of Companies Act are complied with, read with the rules. You also would ensure that the explanatory statement covers points from secretarial standards. I would say that please also check the policy guidelines of the proxy advisories, include those points also.
Penalties imposed by the stock exchanges, AB and CS, CFO is to be paid by the company or individual officer.
So this, if the typically the company, if it is a listed company, you would have a D&O policy, and the D&O policy will take care of it. Penalty will be necessarily covered under the D&O policy if it is in the performance of the duty. But if there is a case of a fraud, God forbid, that has to be paid only by the person concerned. Otherwise, you have a E&OE policy, errors and omissions policy, or you have a D&O policy under which this is covered. And in any case, anything which is done by the person in performance of the duty in good faith, there will be an indemnity clause from the company.
In fact, most of the adjudication orders of the ROC, they very categorically write the penalty imposed on an individual. It has to be paid from their own source of income and their own package. That is what it is mentioned in ROC orders. Okay.
Yeah, but you would get an indemnity or reimbursement where you pay it, from the insurance company, because that is very clearly covered. It's an insurance which you have taken.
Okay,
Yeah,
some
right.
of
And so where the DNO is not there, the appointment letters of employees, especially the officials, either ways, it's on you. I mean, what position you have been onboarded, but mostly they would clarify that they have to be born in your personal capacity.
what should the audit committee members to do to manage NAFRA?
Ensure you are completely in compliance with the accounting standards, auditing standards, quality control, which is something which they generally see in the audit firms, And more importantly, the NFRA has very clearly stated that audit committees cannot take shelter behind the lapses of the auditors. They have to check on their own. For example, auditors' independence, the performance of the auditors, the process has to be followed in a proper manner. That would be a good defense.
Whether one person becomes chairman of all the committees.
Legally, there is no problem. Uh, However, you need to see the bandwidth and onboarding. And if it's a listed company, please check whether the person has all the skills. Check whether the proxy advisories are viewing it in a positive manner, which they will if the person has the skills.
Can a risk management committee of NBSC consist without the managing director?
Sorry, which one is it?
Can a risk management committee of a non-banking financial company consist without managing director?
Why not?
There's no problem.
Okay.
It can be.
Is there any specific instances when the audit committee, I think, can there be specific instances when the audit committee recommendation of the financial statements for approval for a particular financial year, but the board disapprove the same?
I'm not aware of it.
Is there any conflict of the duties of the head internal audit and act as a secretary in the audit committee and prepares the minutes of the meetings?
Conflict in duties. If the head
Wherever
of
the company secretary is there, it's like he should be the secretary to the audit committee, not the internal auditor.
correct.
Why the internal auditor does not get appointed by the audit committee? This is not provided in the company sector. This affects the independence of the internal auditor, which is required under the Indian accounting standards.
Internal auditor, the chief internal auditor's appointment has to be recommended by the audit committee. That is very clearly given in the terms of reference. It's the LODR. It's not there in Companies Act. But the term, but it's a good practice.
Is internal auditor an invitee or observer to risk management committee?
Not necessarily. It depends on the item which is being considered by the risk management committee.
He cannot be an observer at all in any way unless until there is a joint venture and a company and a JV understanding is there. That is a different part altogether. Otherwise, internal auditor, he may be an invitee, but not an observer at least.
Okay, with this, we will come to the end of the questions. And in fact, a lot of appreciation has been communicated to Savitri Madam and Sudhagar and for the webinar. With this, I think we come to the end. I think, Mridul, you can close this screen actually. If there are anybody who wants to question, we can ask them to speak. Yeah, any hands are risen? Let us see. Yeah, there are 2-3 people. Yogendra Singh, Pratap, and Kailash.
सर एक चीज बताऊं
तो सरकार अगर कांग्रेस आगे तो फेल हो जाएगी क्योंकि इतना प्रॉमिस कर रखे हैं उल्टी सीधे कहाँ से लाएंगे पैसा
कांग्रेस सेंट्रल में कहाँ से आ रही है अभी सर
क्या पता लगता है साला ये पागल है लोग वोट देते हैं
Okay, now you can close, Bala, I think.
Yeah, I think with this, I think we can close the session. Before I close, I would like to definitely communicate my appreciation to Mridul, who prepared an excellent presentation, briefly covering everything with the relevant case laws, etc., and all these things. And his orientation very good, very fluently, very nicely, in a very lucid manner. She has put up the thing. My great appreciation to you. Savitri, I have no words for you, for your practical examples and your wisdom and your advice and your instant solutions, whatever the things are there. Very great. As usual, you are very great. Whatever I have seen some years back, even today, you continue to be maintaining that exemplary quality. Thanks a lot, Savitri, madam. Sudhagar, I don't want to tell you separate thanks. Every session, you are adding your valuable wisdom and your practical experiences. Thanks a lot for you. And today's session was really an enriching session. We can see even at these hours, I think now it is 1:22, even 110 people are all still there actually listening. So that shows what is the importance of this topic, what is the importance of the session. Thanks a lot to everybody. With this, we close this particular session. And the next week, we will meet yet another session. Thanks a lot. Thank you.
Thank
Good
you
Thank
very
weekend.
much.
you.
Thank you.
Bye-bye.
Good weekend.
Thank you. Good night.
Bye. Thank you.
I should not say good night to Sudhakar. I should say good morning to you by this time.
Thank
See you
you.
Okay,
soon.
bye-bye.
See you soon back, and especially to Delhi. Thank
Thank-
you, Savitri ma'am. Thank you. Bye bye.
Thank
Thank you,
you.
Bala.